All right, recording is in progress now. Okay, so what we were saying, there was a question.
Me, Raja, I have a question regarding when 30 minutes close in our favor and the next 30 minutes, first 2 minutes or 1 minute tweak and break our stop loss. Do we still consider it as a liquidity grab or خلاص يعني we will execute from the trade?
So the 30-minute close in our favor,
Let's say bullish candle.
bullish, okay. The 30-minute
And
has
after,
closed bullish.
yes, and the first 1 minute from the next 30 minutes, grab, go to our stop loss aggressively. Let's say
Okay,
30 pips. Should we
yes.
wait for it or move our stop loss as we will, it's liquidity grab or we will close our trade?
Basically, at that point, then you need to see how you can add positions back to the trade. That's what you need to do. Your screen is not sharing. Yes, because I haven't done the screen sharing yet. And to better answer that question, let me try this once again. So, I can better answer that question. Trying to see Zoom Raja's MacBook Pro. That's what we're trying to do. Zoom has started to screen share. Liquidity grab is market manipulation? No. Liquidity grab is not market manipulation. All right, let's try this again. Yeah, I don't know what's the deal with Apple over here. I have no idea. Let's try this again. Buddy just works when it wants to work. Buddy, Buddy just connects when it feels like this is a good time to connect. Tap screen mirroring, swipe down on OS earlier, swipe to the bottom, choose Zoom budget meeting, don't see it. Don't see it? What? Restart your device? Okay. I do see it. So we're just going to restart the iPad over here. Yeah, normally liquidity grabs, they happen sometimes, like, when you don't expect, because at times you're going to see a candle that's going to close bullish, and the next candle is going to break the low, and then it's going to continue in your direction. I want to explain it visually because I think it's going to be much better to explain it visually that way rather than to just speak it. It happened on gold yesterday before NY opened. All right, let's take a look at this over here. Let's see. So let's close the simulator and let's bring up our screen. There we go. All right. We got the screen. And another thing that I want to do is I want to make this like this. Okay. So it happened on gold on what time frame? Before NY open. All right. So this was somewhere over. Yeah, where was NY open? Just before your test trade. Right here. Oh, I guess that was news, right? Yeah. Yeah, I guess that was
Yeah, yeah, it was news.
yeah. Yeah, that was just news. So whenever you have news or whenever you have certain things that basically would really nullify your price action, it doesn't make any sense to trade at that point anyway. Because we did assume that once we start to close bullish, there's a probability the price is going to continue pushing up. And we did actually move up, let's say like 15, 16, 17 pips. But then, like news came after that. So there's nothing that we could do. And the next candle, it basically broke the low, broke the high, closed like this. So this means there's a lot of volatility at this point. It's a volatile candle. And whenever you have a volatile candle, whenever you have a volatile candle, it's much better to kind of like wait to see how the next candle is going to close. Because other than that, there's like basically very little that you can do at that point. Let's try this again. Zoom, Raja is back. Not sure if this was covered yesterday, missed yesterday's session, unfortunately. What would be the best way to trade for those who were? Okay. Yeah, that's something we're gonna go over today as well. And that's also gonna be a part of our, you know, psychological topics as well. So just give me a sec here, see if when prompted, select. Okay, it's over here. What Wi-Fi? Oh, yeah.
There you go.
Okay, now it should be good. Okay, good.
Yeah.
All right.
So Raja, I'm sorry, I've missed your chop. I think it's about 1 o'clock GMT on a
1 o'clock
30-minute
GMT.
candle.
Okay.
Yeah, on a 30-minute candle.
Yeah, let's take a look at that over here. So just waiting for this to
One 30.
yeah. Waiting for the Zoom to respond.
Roger, just wanted to ask, how many hours should one spend on the markets today?
I'd say maybe 2 hours.
2 hours.
2 hours. 2 hours is gonna be more than enough. 2 hours. Let's take a look at this over here. So this was what, 1:30, 1:40, 1:30, right here. This one? Oh, this one. This one here. I wasn't looking at the chart, so I have no idea. I have no clue at all. I'm like a virgin at this point who just came to the charts. 0745. Yeah, it doesn't really matter. Whatever that was. Whenever candle's gonna break the lows and break the highs, that's when you're gonna know, like, it's just liquidity grab at that point, and that's gonna be a volatile candle. But so all we did the past 3 days, I want to know if there are any, like, technical questions based on that. So we're gonna go over that. We're gonna go over some um psychology things, like, some very normal situations we have. We're also gonna go over, like, if someone works the whole day and they don't really have the time to sit and trade the 1 hour time frame or the 30-minute time frame. So we're gonna go over that. And then we're gonna do a simulation where you guys are gonna help us win trades during that simulation. So that's gonna be good. So we're just gonna go over some sort of a question and answer session. and then we're going to continue moving on.
Hey,
Hi,
Roger.
Raja. Just a quick one. So if someone is going to spend 2 hours, let's say they are trading a London session, so would they spend an hour of pre-London and 1 hour of London session, or should it be London session then, all 2 hours?
Well, in that case, so what you're trying to say is that you want to spend 1 hour in pre-London, then take a break, and then spend an hour in London Open.
Yeah.
Yeah, no, I don't think that's going to work because you have to spend full 2 hours on the charts. You can't split your hours into like 1 hour over here and 1 hour over there. If you're going to do like 1 to 2 hours, it has to be in succession. Because the thing is, whenever you're zoned in to anything that you do, you cannot break that zone because once you break your zone, once you break your concentration, then it's done. Then it takes a little bit of a time for you to get back in the zone. Because let's say you're waiting for some move to happen during pre-London, right? Let's say price is creating a support and you're waiting for a confirmation for the candle to close bullish, you take a buy and it doesn't happen in that hour, then you're like, okay, you know what? I want to come back at London Open. You come back at London Open, and price did exactly what you thought it's going to do, and now we're just ranging at London Open, right? So that's why it's very important to stick to your time and say, okay, like no matter what happens, these are the 2 hours that I'm going to dedicate to charts. And once I dedicate these to the charts, then I'm just going to stay over here. I'm going to wait to see what price does. If price does something that I can see, or if price forms if price forms some sort of a price action that I can recognize, then I'm going to execute on that. If it doesn't happen during those 2 hours, then you're just going to say, okay, you know what? I'm just going to come back the next day. But never split your time from 1 hour over here and 1 hour over here. It's just going to break your concentration, and it's just not going to work overall. Like your confidence is going to be down. You're going to doubt your analysis all the time because it played out previously, and it's just bad. It's just bad. Don't do it.
So, Raja, what's the best times to trade? What times do you trade?
What time do I trade? I look at charts a little bit before pre-London. So I'm gonna look at the charts around 12 to 12:30 a.m. Eastern, and then I'm gonna go all the way into till close to London Open. That's it. And then I'm gonna start to look at the charts again around pre-New York, moving into New York Open sometimes, But like I've been trading for so long that I'm only going to look at the charts every 30 minutes, right? So I would know that, okay, the 30-minute candle is about to close in 5 minutes. So I'm going to start to look at the 30-minute candle as it starts to close, and I'll start to see, okay, if we're creating some sort of a support or if we're creating some sort of a resistance, is there basically an opportunity or not? So I'm looking at charts at every 30 minutes to see whether I can find something that I've seen before for me to execute. So let's take a look at over here now. So initially I'm a swing trader and my strategy works for me, but not profitable. I won't lie, I enjoy a strategy. Also, can I use both? No, you can't. You can't use both because that's very difficult for your psychology, right? You can't use both because if your mind is already trained with swing trades, then you do know that you have to let your trades run, whether it's on the 4 hour time frame, whether that's on the daily time frame, and if you enjoy taking one trade a day, or you enjoy taking one trade per session, or two trades per session, and you literally enjoy managing risk if price doesn't go in your favor, then you have to stick to that. You can't do two things at the same time. My really good friend, this podcast I did a week, 2 to 3 weeks ago with the Titans or whatever. I'm not sure if you guys have watched that one, Titans or whatever. And he told me that he has 3 accounts. One account he scalps, one account he swing trades, and the third account is where he experiments with stuff. So he said that he's stuck at a break-even stage. So I asked him this one question. I'm like, okay, which account is growing the fastest? And he said the account on which I swing trade is growing the fastest. The account where I scalp that's break even. And the account where I, experiment with things, that's just like, like mostly losing. So I'm like, okay, so you got three accounts, which means now you're mixing three probabilities and overall your result is break even. I'm like, take all the money out of two accounts and put all those funds in your swing trading account and just focus on that. Because you got to double down and focus on the things that are working. Because there's no use if you have one wheel and that one wheel is rolling perfectly, it doesn't make any sense for you to go and create another wheel that's going to do the same thing. Why don't you just double down on the wheel you have, put better tires on it, like whatever you want to do, right? But you got to double down on the things that actually work. Your sound is breaking. Anyone else having issues? Is anyone else having issues?
No.
It's fine now, Raja.
No?
It's fine.
Okay, cool.
It wasn't a bit
Cool,
before.
cool. Is there any technical how to recognize high volume before price fall up or down measuring candles? No. There's no technical. And to be honest, that's the most hardest question, right? The hardest question that you're going to be faced whenever you're looking at the charts is how do I know when price is going to continue pushing up, or how do I know when price is going to continue to push down? We don't know that, right? We can anticipate that whenever we know that, okay, there's supposed to be volume in the market, because volume is the only thing that's going to push price in the direction where you want it to go, right? Whether it's because, okay, look at it this way. If price moved, okay, so in reality, price only moves up or it moves down, right? We can all agree to that. It moves up or it moves down. Imagine if price moved left and right and diagonally and this way and that way. Imagine price moved in circles. We're all just going to be fucked at that point. We're all going to say, oh, yeah, I don't know where price is going to go. Today is a hard day. This price is going to go north, east, south, west, east, east, west, east, east, north, up, down. Where's price going to go? Right? But price only moves up or down. And we know that bigger candles are only formed when there's volume in the market. Whenever we have volume in the market, that's when we have bigger candles forming, like your pre-London, London Open, pre-New York, New York Open. Those are the times when there's big candles forming. And in the beginning, it's going to be very difficult for you to execute on bigger candles, or it's going to be very difficult for you to kind of like, anticipate when they're going to be bigger candles and actually trade on them. But that's when you just have to sit back and you have to watch how price moves. Because the whole beauty about the market is just going to be here. Was having a discussion with one of our partners in our liquidity program that we have, and we were talking about how in Macau, in China, they've built the same Las Vegas Strip in Macau, and that is 5 times bigger than Las Vegas. This means that people are always going to want to trade. They would always want to go and gamble and try to see if they can make the next buck. So the forex market is not going anywhere. It's going to be here to stay. But what you can do is, whenever you see a big candle forming, you have to look at it this way. You have to look at it and ask yourself that, okay, the candle formed in this way, how could I have positioned myself to execute on this candle? That's the trick. How could you have positioned yourself to take the trade? Because in the moment, you wouldn't know. But the whole beauty about hindsight trading is that you can look at that and then you can say, okay, maybe I could have taken a trade here. Let's take a look at this here together. Let me share my screen. And let's take a look at some big candle. Let's take a look at right over here, right? 1500 hours. This is mostly around New York Open. So if we're taking a look at this, and if we say that we had resistance forming right over here, and we had a candle that closed bearish, right? The candle closed bearish. Now, obviously, this candle closed with little to no wick at the bottom. So maybe we couldn't have taken the trade, but essentially, price did move down. And the way price moved down, this was a 49 pip move. Even I missed this move because, I already took a trade early and I wasn't really interested in the move. And so this was a 49 pip move. How could I have taken this trade, right? That's the question you need to ask yourself. How could you have taken this trade? So let's do a little breakdown here together. Now, okay, let's do this. Obviously, we had a resistance forming at this point. So let's just change this to this color. This is a good color. Yeah, it's a perfect color, right? Let's just change it to this. So this is the 15-minute time frame. So now we're going to say, okay, instead of this being a 15-minute time frame, we're going to assume this is a 30-minute time frame, right? Just for hypothetical reasons. We're going to assume this is a 30-minute time frame. The next candle wicked up, what we talked about yesterday in the simulation. Next candle wicked up, it broke the low, continued to push down. Okay, perfect. Right? So maybe I would have taken a trade once it broke the low after it wicked up. Now let's take a look on the smaller time frame to see what really happened there. So this candle started at 1500. Let's take a look on the 5-minute time frame. Right? So now again, we're assuming this is a 30-minute time frame. Okay, so 1500 is right here. This is where this candle started. And as we can see that as it started, it moved up to create a top wick. And then it came down to break its own low. So I think that was a really good entry. Could have been a really good entry, which stops being above the current candle, which is like, 12, 13, 14 pips. Now looking at the 15-minute, we're like, okay, that actually does make sense. Now, how did we know that price is going to continue pushing down? And until where price would push down? Okay, so candle closed bearish. Now we have this wick to the left hand side. So wicks will always get filled whenever there's going to be volume in the market, whenever price is going to be in momentum, right? So with volume, we filled this wick. Okay, next we had a support around 1915. So maybe that's where price could have came down to. So we came down to this support area. Makes sense? So now you kind of like, you're explaining to yourself that how price moved and how you could have kind of like, gauged where price could go. Looks like the battery died over here.
So, Roger, does it mean sports created by just two candles? Yeah.
Yes.
Okay.
Yes. So support is created by two candles. Resistance is basically also created by two candles because that's all what you need, right? And you're only looking at, the 30-minute time frame. You're looking at the 1 hour time frame to create those supports for you, to create those resistances for you. Because what I've seen is that most of the time, the 30-minute and the 1 hour are going to be much more stronger confirmation supports than resistances. 15-minute, not so much, but like, there are certain times where 15-minute actually does work. But mostly I'm going to be looking at the 30-minute and I'm going to be looking at the 1 hour.
Hey, Roger, do you look at the 5 for anything at all?
5, no. I very rarely look at the 5 minutes.
Okay.
Is there any technical on how to recognize high volume? Okay, I already did that. I want to trade from 7:30 a.m. Eastern to 10 a.m. Eastern, but I have 4-hour candle closing at 9 a.m. and the new candle starting. Does it matter? No, it doesn't really matter at all. All right, Will, sometimes the 30-minute candle will form support, but it's a huge 30-minute candle, and the next 30-minute candle will print bullish as well, but it will be a smaller 30-minute candle with lots of retracement. How do I get a realistic profit target from? Yeah, so if a support is formed on the 30-minute candle, and so what Will is trying to say is so what Will is trying to say that if support is formed on a 30-minute candle, but it's a big 30-minute candle, so for that, what we need our handy dandy iPad to cooperate with us. Okay, so it's loading. The screen is loading. If it doesn't load, then we're going to resort to we're going to resort to other methods. What if I plug this wire in like that? Okay, and boom. Right over here. I've started screen share, and I have two screens to my left-hand side where I can see exactly what's going on. Screen is loading, screen is loading, screen is loading. When prompted, select trust. Oh, happened?
No.
All right. Yeah, it's very funny. It's very hilarious.
Mhm.
The way it, because I'm using the same cables, I'm using the same internet, I'm using the same everything. Anyway, not going to waste time on this. All right, let's take a look at this over here. So, okay, we can all see the screen. Perfect. Let's draw this. So basically what Will is saying that let's say we have a support. Now, since we have a support, let's say we have a bearish candle. We have a bearish candle that comes down and it has some sort of a wick. And next we have a bullish candle. That's a big bullish candle. So in this case, as we talked about yesterday, I'm not going to be looking for a buy, because if I am looking for a buy, what I have to realize is that if I do take a buy over here, my stop loss is all the way down here. If my stop loss at this point is, let's say, like 30 pips, 30 pips, 35 pips, if this is a big candle, if that's what we're implying, then that's a very big risk that I'm taking on. So I'm not going to look at that. But what I would want to take a look at is to see that whether this, whether if I can take a look on the 15 minutes. So let's say the 15-minute candles have formed, maybe something like this, and the next 15-minute candle is also formed something like this, then maybe I can have a stop loss, which is going to be below the previous 15-minute candle right here. Maybe at that point. But whenever a candle closes strong bullish candle like this, I always take a look at this and I say like, if this has moved 35 to 40 pips, then maybe I have to wait for some sort of a retracement, create some support, and then continue to push up. And we all know what the support is going to be. It's just going to be a bearish candle creating another bullish candle. So I wouldn't really execute after that. At the end of the boot camp, can we please make a list of the best setups you've seen that happen often? Yeah, yes, okay, we can do that. Do you trade on a 5 minute? No. On uptrend, on support, bullish candle closes with no top and no bottom wick. Does that mean anything? No. If let's say we are closing, with the so what you're saying is like, let's say if we're in an uptrend and we're closing like this, I wouldn't execute at that point. I'd wait for the next candle, the same thing that we did yesterday. I'd wait for the candle to make a lower wick and then break the previous high to continue to push up, right? Like we'd wait for the price to create a lower wick first and then wait for price to continue to push up. That's what I would want to see. Have you taken a few trades between after London Open and pre-New York? Yes. I was looking at the same time, but there was not enough volume. Yeah, sometimes, I have taken trades like that. And you're right, most times there's no volume, but you also have to look at it this way. The only times that there is volume during that time is if pre-London, let's say, had volume, but it wasn't enough. And let's say London Open had volume. Sorry, London Open had no volume. Then maybe you're going to have some sort of movement happening between London Open and pre-New York, but not all the time. So that's something you'll have to keep in mind. That for price to move during times when there's going to be no volume, the only way price is going to move during that time is if the previous time had no volume. You know, let's say pre-London had no volume, London Open had no volume, and now you got a gap which is between London Open and pre-New York. That may have volume at that time. You know, but it's not all the time, it's very rare. Having problems with TP, I don't know when to call it quits. So if I leave it till clean traffic will cut me off at break even. If I close it, then it moves till the wick of the clean traffic, just like just targeting my stops. Okay. So this is a psychological issue that a lot of people go through, right? And the biggest problem happens is that whenever you take a trade, and so I'm going to tell you guys one trick which is going to solve a lot of these problems for you. It's going to solve a problem with, like, not having enough confidence to let trades run, not having enough confidence to kind of like, not to hold trades till break even, like, and not having enough confidence to, like, being scared when you're in a trade, being scared to cut losses. And also, like, sometimes guys say, man, I'm scared to go in a drawdown. So this is the trick. Whenever you take a trade, and you have a take profit set, and now you're trying, and now basically you're getting scared to know that, okay, should I let the trade run the whole thing, or should I move my stops to break even? What should I do? Here's what happens. Whenever you move your stop loss, right? Whenever you move your stop loss, you are accepting that outcome. You have to understand this. So whenever you have your stop loss, let's say your entry is right here, and your stop loss is below a candle, and your TP is right up over here. If your stop loss is down here, you're accepting that loss, right? Because you've already acknowledged the fact that if price hits my stop loss, I'm going to lose 2%, and you're accepting that 2%. But also knowing that you know risk management, you know how to cut losses short. Instead of losing 2%, you're going to lose 1% because you're going to close 50% and whatever, right? But whenever price goes in profit, let's say, so a lot of guys do this. Whenever price goes in, 5 pip profit or 6 pip profit, what you're going to do is you're going to move your stops to break even. Who does this? Who moves price to break even as soon as price goes in profits? Say it. I used to do this all the time.
I do it.
Yeah. Yeah, I used to do it all the time too. Like whenever price would go in 5, 6 pip profits, I'm like, okay, perfect. Let's move stops to break even. Now, whenever you're moving stops to break even, this means you're accepting that break even outcome, right? So even if price comes back to your break even and stops your break even, don't complain. You don't have to complain because you've already accepted the outcome of break even the moment you moved your stops to break even. Right? So don't complain. And one best way to do that is to just let it run. Have your stop loss wherever you have it and let the trade run. Now, the question is, I'm not confident or I get scared. What are you scared of? Is the market's going to come and punch you in the face? Like if someone is going to take your computer away, someone's going to take your money away, there's no reason to be scared. And this is what you got to do. Whenever you get scared, it doesn't come from the fact that you're going to lose money. It comes from the fact that you're not confident enough, right? So the way to build confidence is to actually stay in the trade. And the best way to stay in the trade is to close 90%. That's it. If you close 90%, the moment you get scared, you've closed 90%, you've secured majority of your risk. Now you only have 10% running. Right. And the beauty about having the 10% running is that even if that 10%, or let's say 5%, you're super scared, right? You close 95%. Even if you have 5% running, and if that 5% continues moving in profits, you're confidence is going to go up with that trade because you still got some skin at the game. And if price comes back at your stop loss, you're not losing 2%, right? You're losing like maybe 0.2% or 0.1% because you already secured 95%, right? So whenever you get scared, secure 95%, secure 95% and leave the rest running. Because the more you leave your 5% run or the more you leave your 10% run, more confident you're going to get in trusting your analysis. Trusting your analysis doesn't come from you plotting zones and price going through the zone and you're like, oh, you know what, my analysis played out. Your analysis doesn't, your analysis is never going to play out because price went to your imaginary target you had. Your analysis will only play out if you had some trade open. You know, whether it was a 1 cent lot, 10 cent lot, 10 lot, 100 lot, whatever that was, right? So whenever you get scared, close 95%, leave 5% running so it reaches your target. You're one step forward with confidence. Then if that happens the next time, right? So if that happens the next time, you're going to be more confident. You're going to leave 10% running. Maybe after, today is Q&A session. What do you think we're doing right now? Oh, today's Q&A session. Yeah, it's Q&A session / psychology. So like, stuff like that. And then we're going to do simulation. So as you keep more positions run over and over, maybe in 6 months' time, you're going to say, okay, you know what? I've been letting 10% run. I've been letting 30% run. Maybe 6 months down the road, you're going to say, okay, you know what? I'm going to let 50% run. Or I'm going to let 60% run. Or fuck, you're going to say, I'm in profits for Monday, Tuesday, Wednesday. And on Thursday now, I'm going to let 100% run. But confidence is built over time. You're not going to get confidence from day one. It's built over time. It took me 3 years to be able to let my entire position run. 3 years, 4 years, 5 years. It took me 5 years to be able to let my full position run to where I think price is going to go. And I happened to open my own brokerage in 5 years or 6 years. I happened to open it. Now guys think, oh, it's just like whatever. Coincidence. Let's see here. So we have, should we try to find most volatile pairs that we will have most volume? No, it doesn't matter. It doesn't matter whether you're trading the most volatile pairs or you're trading the most unvolatile pairs. It's what we talked about on day one. You choose the pair that you're going to focus on, whether it's going to be gold, pound yen, USD yen, Swiss yen, like AUD USD for whatever matter. And because every pair is going to have its own time when it's going to have volume. So you got to focus on that. The range is 30 to 40 pips. Is there a time when it can be less or not a good idea? Gold is 10 to 1, correct? Range is 30 to 40 pips. I think that's good. But there needs to be time when there's volume over there. Can we look at the 30-minute for the scenario? Yes. What to do in the scenarios where there's a large retracement like this one on 10th August in the downtrend, there's huge retracement and then trend continues. I don't know. You have to send a chart. I don't know what 10th August looked like. Still getting hung up on wick fill versus rejection wicks. Okay, let's take a look at that together. Wick fill and rejection wicks. So we're gonna go over to our iPad over here, and let's try this again. I think it works after 30 minutes or 40 minutes or whatever. Oh, the wrong one. Quick fills and rejection rates. All right. Airplay mode is on. Airplay mode is on. Okay. Wish things were easy. You just plug it in and it just pops up. Wish things were that easy. But unfortunately, things are not that simple.
They're both
Unfortunately.
under the same Wi-Fi, right?
Yes. Yes, sir. They're both exactly under the same Wi-Fi. Unable to connect to Raja's Zoom MacBook Pro. Okay, screw it. We're gonna go over here. All right. Let's say we have so the difference between a wick fill and a rejection wick. Okay, so we got a really good example right over here, right? What better way to do examples than on the chart itself, right? All right, let's take a look at this. So this is what we have is, can we zoom in more? Okay, yeah, we can. So this that we see, this is a rejection rate, right? Because it went down and it came all the way back up, rejecting this support. This is a rejection rate. Now, how do we know that this rejection rate on the 30-minute time frame is going to be filled? Can someone answer it for me? How do we know that this rejection rate is going to be filled? We don't know. Okay, valid question. Valid answer. Big body.
Look at the lower
Resistance.
time frame.
Resistance. Yes, lower time frame. Resistance, right? So if the 30-minute candle has a rejection wick, right? Now we need to see that, okay, how do we know that this rejection wick is going to get filled with the next 30-minute candle is by looking at the lower time frame to see if we're creating resistance. Right? So let's take a look on the lower time frame here now. So this is a very good example where we can do some investigation. So this is the 30-minute, and this started at 12:30. All right, let's take a look on the 15-minute. So this was this one? Yeah, it was this one. Right? So this 15-minute basically went up and closed the 30-minute. So we created some sort of bullish candle on 15-minute. Let's take a look on the 5-minute time frame. Right? So we're not trying to trade. We're just looking at it to see if we can find some sort of information. Right? So now, if this 30-minute was a rejection wick, so you can see the time right here, right? So this 5-minute was the last 10 minutes of the 30-minute candle. The next 5-minute was the last 5 minutes of the 30-minute candle. Now, how do we know it's going to fill the wick right over here? Now, the next 5-minute here closed bearish, creating resistance. Now, also mind you, I'm not looking at the 5-minute to create resistance. This is only for explanation purposes. We create resistance, and then we see the next 5-minute move down. It moved down. We're like, oh, wow, 15, 16 pips. The one after that moved down further 23 pips. So we formed resistance and we continue to push down. So whenever you have a rejection, it doesn't really matter whether it's a rejection wick or a wick fill. A wick is a wick, right? So this is price coming down to create some sort of a support. And now we're seeing that, okay, are we going to fill this support or fill this wick or not? And the only way we know we're going to fill the support is if we retrace to create resistance, whether it's breaking support or whether it's impulse entry, but we need to create resistance and then for price to continue pushing down. So whenever you have a rejection wick, you're looking at the lower time frame to see whether we're creating some sort of a resistance for price to continue pushing down. Or if we have a rejection on the top side, let's see if we can find an example right here. Or let's say if we have a rejection on the top side, let's say right over here, right? So this is the rejection, okay? And now this is the rejection in sort of like a downtrend. So we're trying to see that, okay, are we going to fill this wick or is this going to be a rejection? Now, if this is on the 1-hour time frame, and if we think that we should fill this wick, this means on the lower time frame, we should create some sort of a support. If we can create some sort of a support, then we could possibly fill this wick. So let's investigate that. Let's investigate that, shall we? So this was done at, 8th August, 1400 hours. Let's take a look on the 30-minute time frame. 8th August, 8th August, 1400 hours. So this is it right here, right? So this is the second 30-minute candle of the 1 hour that closed bearish. Now, if we want this wick to fill, we want to see if we create some support. Okay, perfect. Let's take a look on the 15-minute time frame. 8th August, 1400 hours. So we're just doing some, whatever we're doing. So see this right here? This is the 1 hour candle, went up, created a wick. 15-minute candle, this is the last 15-minute candle that created that wick on the 1 hour, and we came down. Now we needed to create some sort of a support for price to come back up to fill this range at 1931, right? It's a 33 pips away. Now, do we form support with this 15-minute? Absolutely not, because it's a small body candle. Next one, again, small body candle. Small body candle, so no buys. Next one, we do create a support with a strong 15-minute candle, but it has no wick on the top. Now, can we take a buy on the next candle? Absolutely not, because we closed bearish. How do we know at that point? I don't know. We don't know, because we're just doing some hindsight analysis right here. Now, let's take a look at the same situation on a 30-minute time frame. 30-minute, 8th August, and it was right over here, right? 30-minute. Handy dandy arrow. 30-minute candle closed bullish with no wick on the top, right? And the next candle basically didn't really go up. It just came down, right? So if we wanted price to, like fill this wick on the 1 hour, then we needed a support to be formed, which was not formed, and we couldn't really go. How low can we go? How low can we go? 5-minute lowest? I wouldn't recommend you to look at the 5-minute. I would only recommend you to look at the 5-minute when there's a lot of volume in the market, like when Russia went in Ukraine, when there's NFP, when there's CPI. And I don't mean to trade 5-minute on this news. Only look at the 5-minute when the 15-minute candles are like 20, 30 pips, and then the 5-minute candles are going to be 10, 15 pips. So, Paul, I hope this helps.
Yeah, that was awesome. Thank you. How long did it take you to get that down?
Fuck, man, like 5 years? 5 years, 6 years?
It's like sometimes you look at wicks and he's like, yeah, should I trade it or should I just run away?
Yeah, if you're looking at wicks on the 1 hour or 30-minute, just take a look on the smaller time frames to see, are the smaller time frames giving you some sort of an information?
Perfect.
Yeah, that was very useful, Raja.
Yeah, thank you. All right, let's see over here. Would you say continuation trades are the one you let run mostly, or what's your favorite setup you let run? Continuation trades are the ones that I mostly let them run. The continuation trades, I just let them run. iPad, same Wi-Fi, yes. Maybe try mirroring option on iPad. Yeah, it's not that clean as I want it to be. Do you think when larger time frame candles open, there's a higher chance of a pullback? And should we be more careful on the 4-hour, 1 hour? Okay, yeah. So whenever you have a higher time frame candle open, there's going to be a bigger pullback, and that pullback on the higher time frame is something we discussed on day one. Whenever you have a higher time frame, the 4-hour candle, the next 4-hour candle will have a pullback, and that pullback could be the 30-minute candles moving down and creating market structure. This might be a basic question. However, I find it difficult to make decision on which candle to use for entry. Can you give examples where you would use a 1 hour confirmation instead of a 30-minute or vice versa? It all comes down to confidence, Let's say if I'm taking a buy and I'm waiting for support to form, I'm going to wait for the 30-minute candle to close bullish. If I can have the 30-minute candle closing bullish, I'm going to take a trade. And, if a 1 hour candle closes bullish, I'm going to take a trade over there. But there are infinite amount of examples we can go over, but the best thing for you to really understand on this scenario is to really look at live examples as they're happening. This may take you 2 to 3 months It's like gauging that, okay, the 30-minute candle closed like this, and a 1 hour candle is closing like this, and price moved up. Okay, let me write this down. Okay, perfect. This worked. Let me wait for this to happen maybe next week or next month or a month from now or like whatever. And if a 30-minute candle closes a big candle and a 1 hour is still open, what should I do at that point? So all these scenarios, you have to look at them live as they're happening, which is why they say that experience counts a lot. Which is why sometimes you're going to see guys like, they're going to execute on a 30-minute candle, which is forming perfectly. But when you look on a 1 hour, you're going to say, well, I don't know why he executed on the 30-minute because the 1 hour closed like this. It's because there was that experience involved. We can go over a lot of different scenarios on a 1 hour, 30-minute. Then maybe the next day, like candles are going to close, which we never went over. So it all depends on how many times have you seen supports form in times of volume, and how many times have you really experienced price to go in your favor and not go in your favor? When price does not go in your favor, all you can do at that point is to just manage risk. If price did go in your favor, have you been taking notes? Have you been taking, test entries to see how far price goes? So that just comes down to experience at the end of the day. When we start talking about psychology, please can you spend time about your transition to 1 to 2 trades? Yes, for sure. How do you reconcile letting trades run with your rule of never losses? What? How do you reconcile letting trades run with your rule of never letting profits?
Yesterday you said don't let a trade go that's in profit go into drawdown. And also, we're trying to see if we can let trades run. So you said just accept the stop loss. This was going back to when we were moving to break even, because I'd moved my stops to break even too quickly. And sometimes it's like actually give it a bit of room to run, because you just because it's a little bit in profit doesn't mean it's like quickly jump all over it. So I just wondered if
exactly, because what happens at that point is, let's say, so I did say never put your stops at break even. Also, if you're letting your trade run, you need to give your trade some room to breathe, and what I found that works best for me is that if I'm trading on a 30-minute time frame, I'm going to let the first few minutes of the 30-minute candle be in a drawdown, right? If the 15 minutes, so let's say I'm taking a buy, right? I'm taking a buy on the 30-minute time frame, and the first 15 minute of the 30-minute stays bearish, which means it stays in drawdown. I'm going to be okay with that, right? Yeah. But I want the 15-minute to close bullish. If it closes bullish, I'm going to stay in the trade. Perfect, right? And then I'm going to anticipate the next 15-minute to continue bullish. But if the first 15-minute closes bearish, then I'm going to take 50% off. Because if the 15-minute has closed bearish, then there might be a possibility that the second 15-minute may also continue bearish. So if I want to lose, I want to lose less. But if price continues to push up, if the second 15-minute candle continues to push up, then I know where to add risk back to the trade. Something we talked about yesterday.
Yeah. Cool.
Yeah, because
very helpful. Thank you.
Yeah,
it's just about giving, sometimes you just jump all over it too quickly, and it's like actually just you got to give it a fucking chance, right?
Yeah. That's what I used to do in the beginning too. Like price would go in profits. I was like, all right, I have to protect this. I put my stop to break even.
Yeah. All the time.
Yeah, right. Or like the biggest thing I see.
But then all you get is like trades that you get stopped out of quickly, or that you jump out of quickly, and then you're like, well, we're never going to win if you don't give it a chance, right?
Yeah, exactly. Or one thing I see guys do all the time is, I'm going to have a very tight stop loss. That doesn't make any fucking sense. Like the spread is going to take you out and then go where it wants to go.
I always do that when I'm in profit, like 10 or 12 pips, I'll close 50%, move to break even, and it gets stopped out, and then it keeps moving up or moving down.
Yeah, exactly. Yeah. So you gotta, and like, as Jason said, you gotta give your trade a fucking chance, like, to have some breathing room. It's gonna go negative. That's perfectly fine. As long as the candle is not closing bearish, it's perfectly fine. No problem. And like, not always you're gonna have the opportunity to manage risk, right? Sometimes you will take that full loss because the candle just didn't go in your favor. It's going to happen. It's like, taking losses is a part of the game. I took a massive loss the first week of August. It's perfectly fine. Some weeks I'm going to take very small losses. Some weeks I'm going to take full on losses where I'm going to say, yeah, I have no explanation for this. I just took a big loss. No explanation. But the more better you get at managing losses over the span of, let's say, 6 months, 7 months, those bigger losses are going to seem like nothing because you've been managing losses and you're letting trades run. You're building confidence as you go. So with time, it's just going to get better.
Rather, just how much should be the breathing space? How many pips for the trade? And can we please have a look at one of the retracement one, where there's a huge retracement and then trend continues downwards? There is one example on 10th August, New York Open.
Oh, is that the chart you sent?
Yeah, it just didn't go through well, so I opened it up and there was a broken link, so I can quickly send the link now, if that helps.
Yeah, there's no such thing as how much breathing room you want, because you're going to have a stop loss, right? So your stop loss is the breathing room. Let's say if you're taking a buy on a 30-minute and your stop loss is below the 30-minute candle, that's your breathing room right there.
Okay. I've just sent the link to the chart now. So there is a huge retracement and then downward trends continues. So what generally I do, I close it up. So mostly in retracements.
All right, let's see over here. Okay, you guys can see my screen?
Yes.
Okay. So what happens right here? So you took a sell or a buy?
I took a sell and then there's a huge retracement, so I closed it. And then it continues, the trend continues, the downward trends.
So where was your stop loss?
So my stop loss was 10 pips.
Why? No, like where was it, based on the candles?
So so the trade started from 1926 and it was a trailing stop loss, so which was 10 pips, and it continued, and as there was a retracement, it just hit my stop loss. But I was away, and when I came back, the trend continued downwards, but my trade was gone.
Okay. Yeah, so if you're looking for a price to run, just like, if you're getting scared as price comes up to retracement, just close 90% and leave the rest running with your original stop loss.
Okay.
With your original stop loss. Like if price has not moved to your target, or if price has not gone to where you think price should go, never move your stop. I'm only going to move my stop loss at break even if I'm securing something. If I'm not securing any profits, I'm never moving my stops to break even. So that's a very good point that you make. You have to note down is that always move your stops to break even if you're securing some positions. Other than that, there's no reason to move your stops to break even.
Okay, and there's a new thing which I recently discovered, was the trailing stop loss, where it keeps moving it. So I think is that a good idea? It saves your capital, but obviously the opportunities like this are gone then.
Yeah, like you have to move your stops above the previous 30-minute candles instead of 15-minute, because 15-minute is a weak confirmation.
Perfect. Thank you.
Roger?
Yes. Yes.
Roger?
Hello?
Yeah, what about when you always close on 15-minute if it goes back against you, a candle goes back against you? Yeah. But what about if it does close against you, but on 30-minute, 1 hour, 4 hour, everything is heavily on your side? Only the 15-minute close is the opposite way. Would you sort of trust the higher time frames and not close 50% then?
See, it depends. If I'm in profits for the week, then I'm going to trust the 1 hour and the 4 hour and the 30-minute and I'm going to let the trade run. If I'm in profits for the week.
Only. Oh, right.
Only. Yeah, like that's my rule. If I'm not in profits for the week, and this is my, let's say, first trade I'm taking, then I'm going to close 50% and I'm going to let the rest run.
Okay.
If it goes in profits or if it, starts to break beyond the 15-minute, and if there is an opportunity, then I'm going to add risk back. But most probably, I'm just going to close 50% and I'm going to leave the rest running.
Okay, cheers.
Trusting the high time frame. Let's see over here. On the 4-hour candles, can we expect something like this in the first 2 hours, making a liquidity break? The last 2 hours goes the right direction. Happens to me. Yeah. So basically, what you're saying is that the 4-hour candles, you're basically looking at the the lower time frame to see whether we're creating some market structure to continue. Sir, one of your rule is whenever the market makes a high, 90% of the time it will retest it. The rule is valid for lows also? Yes, because the market moves up and down the same way. How do we calculate pips on gold in dollars? So if, let's say, gold moves by $1 from 1913 to 1914, that's 10 pips. Do you ever look at other correlated markets? Nope. Goes back to what you said about recognizing candles. Journaling has taught me the skill. That's correct. If we have a breakout candle that looks perfect in 30 minutes, okay, but last 15-minute candle close small body, would you consider to take a trade or maybe wait for the retest? No, I'd still take the trade, trusting the 30-minute. So the question is, if the 30-minute candle closes a nice, healthy candle, but the last 15-minute closes a weak body candle, would you still take a trade? I'd still take the trade because I'm trusting the 30-minute candle, because the 30-minute is a stronger confirmation than the 15-minute. Works very good. For support resistance to be made, it depends on the size of the bullish bearish candle. Yes, something we talked about yesterday. How many pips should the breathing space be? Okay, already talked about that. Can you draw his entry and TP? What would you have? Okay, we already talked about that. So my secret sauce for trading, it's right here. This is my secret sauce. Some mints. You gotta have these mints and you gotta blow on the markets. So the market knows you're a fresh person and it's gonna help you.
Nice.
It's right there. Have some mints. Based on your experience, how to determine when to increase lots? Excellent question. And this is something that we're going to go over after our little break. So I'm going to have a little bit of a break. Let's take like a 15-minute break. Can you explain metal market open? It's explained in one of the live streams. I'm going to tell you guys about that too. Let's take a 15-minute break. It's 15 past the hour, so we're going to be back in 15 minutes. I'm going to let the Zoom also buffer, and hopefully our iPad stuff works. Huh? What? Somebody screaming at somebody. All right, cool. Yeah, okay, we'll see you guys.